Everybody, happy Sunday and welcome to episode 7 of the Stock Trading Pit Season 4. Today we have 4 segments as always, 2 special guests. Segment 1 is going to be Talking with Traders with Dan and our guest Izzy. Segment 2 is going to be the broad market review, going over the broad market ETFs, as well as some metals and some crypto, all of which did not look great this week. Segment 3 is going to be the Watchlist with Austin Silver, founder of ASFX. And then segment 4 is going to be the weekend community chart requests, as well as a little bit about our mobile app. So sit back, relax, and let's jump right into it.
Hey everybody, welcome back to Talking with Traders. In this episode, we've got a great guest, Izzy from Miss Izzy Trades. Izzy, thanks for being here.
Thank you so much for having me. It's always a pleasure meeting with the guys over at TrendSpider.
Thank you, I appreciate that. It's always great to talk to you too. For those who don't know, Miss Izzy's been trading for 10 years, options, micro caps, is well respected in the community, and is somebody you should definitely check out. So let's jump right into it. What brought you into trading? How'd you get started?
I think a lot of it just had to do with, there's actually one thing I've never shared before on an interview, and I've done a lot of these interviews before, but maybe I'll share it on this one. I've actually got a cousin who made millions and millions and millions and millions of dollars from trading back in the 2008 crash. So and I remember my dad always talking about him, and he actually used to live with us when I was younger. My dad used to help him out. I've never said this live on here before, but that was one of the first things that sparked my interest. I remember that as a child, and just seeing how much he grew from that 2008 crash. That's when he started trading back then. And at the time I wasn't legal, so I started kind of just speculating the markets, watching when we hit that recession, kind of just doing my own research. My first job in college was tech sales, so I was, selling Apple products, BlackBerry products. I'm Canadian, so I was huge into BlackBerry and all those Canadian names, right? Nokia and then Samsung. So I really was curious to see how tech could possibly surge. So I was investing in mostly those names, Amazon, Facebook. I was there for all those IPOs, Shopify, right? It's like I was really, really invested into all those tech names. And then it kind of started to diverge. I come from a really big oil hub where I live. So I was trading a lot of commodities, mostly oil stocks. A lot of them are headquartered in my city. So I knew I was really familiar with them. I could drive right by their headquarters. It made me comfortable knowing these companies, knowing people involved in the companies. So I started trading a bunch of commodities and mostly Canadian stocks for the most part, just because of the exchange rates. And we used to have a lot of, back then there were a lot of things that we couldn't do in Canada, like certain securities that we would get taxed more on. US dividends, things like that. Fees were insanely expensive. It was like $50 per trade. And we didn't have after hours. We didn't have pre-market. So there was a lot of reasons why I never really traded too many US stocks in my early years, up until maybe, aside from like the big large cap names, up until maybe around 2000, probably shortly after the Canadian cannabis surge. I was part of that too in the early stages. A lot of these companies, again, in my area, right next to me, I know that, do you know what I mean? So I got really familiar with ACB. They're a few hours north from me. CGC, like Canopy Growth, I bought at like $2.
That's great.
ACB at like 30 cents, right? So it's like, I knew all these companies. I was on Health Canada. I was doing my research with my friends. I had a small group that, local friends of mine that I used to trade with, that I found out that they also trade. So it was kind of a cool concept for us. We would meet at one house. We'd start looking at charts together. That's how I got into technical trading, through one of my friends, Johnny. Shout out Johnny. I'll always remember those days. And then we used to kind of just gather our thoughts, but they were mostly doing all the Canadian stocks. 2014, I made Twitter. And that's where, it was like, well, I'm just going to start sharing my stuff on here. And that's where I just built my community, right? And then I started seeing what everyone else was doing on there and just sharing my charts, sharing my thoughts. I was starting to get a lot of engagement. And back then it was a little bit harder to gain following. Like I think, and nothing against anyone that started trading in 2020, but back then it was like, you really had to work to get a following, right? Like it was really, really hard, especially being a girl. There wasn't too many of us. I was anonymous on Twitter for my first 3 years, so no one really knew if I was even a female on Twitter. They kind of just assumed I was a fake anime account or something. And yeah, I started sharing that's when I really dived into doing like microcap biotech for US companies. I really like doing the research. I've got something called Cash Chart Catalyst. So I always like to make sure that there's cash on hand and there's some sort of catalyst in a chart to work with. So that's why I like the biotech names.
Thanks for sharing that.
Yeah, no
so
problem.
you mentioned getting into technical trading. I'm just curious, what's your style? Are you more of a swing trader, or you were kind of alluding to holding things for a long time? Is that more of your style? Tell us
I
about
think
how
my
you trade.
style has, yeah, it's definitely changed over the years, I think.
Everybody's
Um,
does.
Yeah, like I for sure swing trading when I first started trading because I was in school, I was working full time. I'm officially not working full time anymore. I quit my power trading role back in May, so this is my first time actually going full time. So it's a big change, but I've been able to day trade a lot more. So I think I'm a combination of everything. It really just depends on what I'm trading, right? Like I do have my longer term holdings, and I definitely do swing trade some of the lower volatility names more than I do day trade them, but I'm day trading a whole lot daily, like various names, whether it's large caps, small caps.
Okay. When you're day trading, what indicators do you use? How do you determine when to buy and when to sell?
So it's funny because I think a lot of people think I trade based off of indicators, but I don't.
Okay.
I'm a price action trader. So when you're watching me trade, and so the charts I share on Twitter, I'll have volume, I'll have moving averages, I'll have stochastics on there. I do like having those on my charts as a secondary indicator. But when I'm trading in real time, I'm mostly watching volume and the candlesticks. So if I'm seeing certain price levels hit, watching the volume as they hit those levels, how price reacts once it's hitting those key levels of resistance or support. I kind of have a different style where I'm always looking at a 1 minute chart, but I capture most of my levels from a monthly. I always go big and then small. So I'll go monthly, weekly, daily, and then I'll kind of start like diving down into a 4 hour, 2 hour, 1 hour.
Okay.
I like using time frames that maybe others don't really use. So my favorites are always like a 2 minute because I feel like a 1 minute's a psych out. And then I'll use a 10 minute because sometimes the 5 and 15 won't show you the whole picture. So I usually flip between the 2 and the 10. And that's usually my style of trading. If I'm seeing a flag breakout or, like I have my indications, but it's all based mostly on price action.
Okay. What you mentioned a lot of sectors from tech through oil and biotech. What are you kind of focused on right now?
So it's actually funny that you asked that. I did a full hour this morning on the sector rotation. So I do a weekly blog. If anyone likes to read those, I have a weekly blog that I started doing a few months back, mostly talking about the rotations in sectors. So back a few weeks ago, I was looking. We were a long arc and growth back in for the rotation out of crude and low volatility names back in, I think, towards beginning of May to mid-May maybe. And 4 weeks ago, we started to go out of the growth names and back into the lower volatility names. So when I say lower volatility, I'm talking about Coke, Pepsi, CSCO, Oracle, boring names, right? That no one really likes to trade. And so today we were trading Coke, for instance. We went long a lot of these lower volatility names 2-3 weeks ago, 4 weeks ago, whenever we looked at the rotation. And I'm still really liking a lot of these names heading into, a lot of them have earnings coming up. So I usually do a pre-earnings run up. And when I do that, it's not necessarily the week of or the week before. It's I like to go long, usually a few weeks prior into the run up. So we're just kind of playing that right now and waiting to see what happens once growth kind of finds and consolidates again. So kind of just scaled out of the growth names into lower volatility. And we're kind of riding that wave right now.
So when you're trading a run up into earnings, do you usually sell the news? Is that the plan?
Yeah. So like something for like Coke right now, for instance, we played that last run back in March, April, May, when the markets were chopping sideways. we were playing the low volatility names. So I don't know if you guys want it, I could maybe share it, but I don't have to. Coke was kind of just rising, but I still really liked Coke on a monthly level, on a monthly view. But we decided to kind of cut it, and at the same timing, earnings was coming up, right? So we scaled out of that, and on a wider scale, it still looks like it's got some room to go on a monthly and quarterly chart, but where I like to capture the majority of the move, and I never hold through earnings. The only time I'll ever hold through earnings is low volatility names sometimes, because you don't get crushed like you would on high volatility. So something like Coke and Pepsi, if I'm holding leaps or 3-4 months out and I've already captured most of my move, then I'm okay riding a few into earnings, especially if the weekly or monthly still has some room to go, which they do. But for the most part, if I'm holding, let's say, monthly calls that are expiring July or August, I'll be mostly out before the earnings hit.
Got it. You mentioned options. Are you primarily an options trader now, or do you do the raw commons as well?
I do everything, to be honest.
Okay.
So if it's something like Coke, it's usually options. But something like, sometimes if it's when I was trading tech, let's say I went long Facebook back end of March. Okay, well, Facebook to me, when I was looking at it, I was like, 250 for Facebook. I'm just going to buy a bunch of commons, and I'll play options longer dated, just because I like to avoid the volatility on those high volatility names, right? So I'll kind of do that, and then it gives me the optionality if I want to, I don't like selling naked, right? So if I want to do that to protect my position, then on the days that it's choppy, then I'll do that. And I like to, mostly for names like Tesla that are more high volatility, I'll only day trade options on those on a break. I'll never hold options overnight on names like that. It's only for lower volatility names like I said, like Coke, Pepsi, Oracle, things like that. Then I trade them a bit differently than I would something like Amazon or Shopify or Tesla.
Makes sense. Do you typically do leaps and like far out options, or do you ever do like 0 day to expiration, any of those popular things nowadays?
Yeah, I do. Like I do all of them. So for instance, Tesla, I think when was it? I think was it Friday? I'm like so lost in my time right now. Tesla, for instance, had a 2-hour flag that we played the other day. And I was like, okay, Tesla looks great. This is a 2-hour flag. I'll day trade it. So today we day traded Apple, right? So it's like on days when I see a potential breakout happening, I'll day trade them. Say I'm looking to sell within a time frame, right? Like within the hour or whatever it is. So days like that, yes. But again, that's for more of the higher volatility plays. Sometimes to maximize my profitability on the lower volatility names, I'll have my leaps. So let's say, for instance, Coke, I'll have my leaps. I'll have a month's time. But on a day like today, if you pull up the Coke chart in your free time, a move like that, you want to try having a weekly option too. You'll capture a much bigger move. So sometimes I like doing a combination. I like to maximize my profit on the same name. So I'll have multiple contracts on the days it breaks. So on a day like today, when Coke is breaking my key levels, I'll buy weeklies, but I'll still have my monthlies and I'll still have my leaps.
Got it. How many positions do you have open at one time usually?
It's all relative to the market sentiment. So this is how I knew that the market was topping back in January, February. I had way more positions than I normally would. And it was because there was too many things fitting my criteria. So I was like, okay, I usually don't like to have more than 10, right? Like that's a max for me. Day trading, I personally like to keep it 5 or under, because I only can manage so much, because I'm teaching at the same time. I'm helping other people, right? Like I can only manage so many positions. But it's all relative to volume, right? So back in January, February, people that were, I think sometimes being in the game for a long time doesn't always give you an edge, because you're trying to adapt, right? So that's when I was like, you know what? The market's telling me to buy. So it's like, I have to buy, right? It's like everything is moving. So it's like, whereas people are like, no, this is too crazy. But it's like, no, like it was just moving and it was going up, that there was no stopping it. So I was definitely holding a lot more positions than I naturally would, right? Like out of my comfort zone. But again, it's all relative to how things are reacting. Whereas, back in maybe end of February or March, all I was trading was crude, nothing else. So I was trading,
Focus.
yeah, XOM, XLE, COP. So it's like, if I had more than one position, it was relatively in the same sector. So it wasn't like, whereas back in January, February, it's like everything's going up. So I had to watch numerous sectors.
I was in the same boat. I had way too many positions open going into that. Right. I think that's like, I didn't listen this time, but I remember last time the market, not before COVID, the last time the market crashed before that, my dentist was asking if he should buy stocks. Right. I had like friends who don't invest and don't trade asking about it. And I was like, this must be the top. Right.
That's always the case.
It is. It's funny how that works out.
My indicator this time was my dad asking me about AMC. I tweeted right on Twitter, and he like said the completely wrong ticker. I was like, this thing's gonna crash tomorrow.
Yeah. I remember friends who haven't traded a stock in their life calling and saying, hey, should I buy GME? It's 400. They say it's going to 10,000 on Reddit. I'm just like, okay, it's going to go down. It's not getting any higher than here, right?
Yeah, well, I mean, it's like, you just kind of, it's funny, but that really is an indication, right? Like I actually, what else I use as an indication when I start getting more followers? The more followers I've been gaining, if I gain a lot of followers in a shorter period of time, that's an indication, right? Because it's a lot of new eyes coming into the market. So
yeah, like swings on that CNN fear and greed thing is actually a great indicator.
Yes, and I love, that's what I love TrendSpider for too, right? Like a lot of the sentiment trading, a lot of great indicators. I don't get to use it and utilize it as much as I should, but it's definitely a great way, especially for me, someone that watches rotations and market sentiment. So many great things in there and indicators and tools that are available on TrendSpider that are beneficial for everyone's trading. I'm not just saying that because I'm talking to you. Seriously, it's a great platform. It really is.
Means a lot that you'd say that. Thank you.
No problem.
So Izzy, we're getting low on time. I'm about to get yelled at. So I'm going to careen into my very last question for you. What advice would you give somebody who's brand new to trading, right? Like someone who wants to get into this, but has never done it before?
Probably three things.
Okay.
One, make sure you understand risk and reward, right? And I know it's kind of an old saying, but really don't put all your eggs in one basket. You want to make sure you have good ratios for just even practicing, but I don't agree with, I definitely don't agree with paper trading. I don't think that's a way to learn. Personally, that's my own opinion. I've never done it. I don't think anyone should do it. I think the real way to learn is through actual experience. And I think that kind of, unless it's kind of like you have to experience it for yourself firsthand, right? So that's one thing. Second, I think just even getting a grasp of technical trading, right? And it doesn't have to be using and knowing all the indicators, not by any means. All you really need to do is sit back, watch real-time price action, look at the levels, pull up wider time frames, right? For new traders, the less candles, the better, okay? The more candles there are on a chart, the more confusing it is. The bigger the time frame, the less the candles. That's one of my biggest things I tell new traders. The less you have to look at, right? It's like a cheat sheet. If you have 1,000 candles versus 100, right? It's easier on the eyes. So whatever makes it visually easier for you, for those that, kind of look at a chart and they're overwhelmed, like, Izzy, how do you know which levels to look at? Well, the less options you have, the easier it is for you to spot them, right? So that's two. And I think the last thing is really just, if you're on Twitter, if you're following anyone, like really don't look for anyone for alerts. Like you really have to at the end of the day, everyone's responsible for their own trades, right? So you need to take the time. This isn't something that I say, treat it like a business, right? So if you don't respect money, it won't respect you, period.
True.
That's it. And with trading, you always have to be willing to risk that there is a potential to lose. That's just the reality of it. Doesn't matter how great the chart is. It doesn't matter if there's great news, right? There's always that risk. So just understanding and accepting of that risk is kind of something like that will kind of help control your emotions when you're trading, right? Because then it won't overpower what you're actually seeing happen in front of you. This way, you actually stick to your rules, because the only one that makes the rules in trading is you. That's the problem. That's what a lot of traders, you know, like in anything in life, at work, you have rules, at school, you have rules, but they're made up by someone else. You're just following them. You have to create your own rules. You have to stick to them. If you don't, you're going to fail. That's just, it's quite simple. So have a good set of rules and really try to stick to them so that you have it's not about how much you make. It's how consistent you are at making money. That's it. Get rid of the dollar amount. That doesn't matter. It's just being consistent over time.
Absolutely. That's a good point, actually. It's because I've noticed it in my own life. It's very hard to follow your own rules. It's a lot easier to follow someone else's.
Exactly.
Yeah.
Yeah.
Well, Izzy, thank you for being here, and everyone watching, be sure to check Izzy out. We're going to put links in the description to her Discord, her website, her Twitter account. The website it's missizzytrades.com, right?
Yeah, that's correct.
Awesome. So be sure to check Miss Izzy out. And Izzy, thank you for being here. Appreciate it.
Thank you so much for having me.
It was great to have you on. Thank you.
Take care.
Alrighty, let's look at the broad markets going into next week. And this past week was not the most bullish week we've seen, but we also had a very strong last couple weeks across the board. So not shocking to see a pullback here. On SPY on the daily, you can see that we did break down through this ascending wedge, and just kind of the next area to watch, level to watch below, not support because it's not support yet, but an area to watch below would be the anchored view app from this June 18th pivot. And remember, you can always just right click, create an alert on this area if that is an area that you want to watch below. So make sure to always set your alerts so you're not having to stare at the screen all day into the next week. So the one thing that was definitely a little bit of a heads up, I guess, was on the weekly chart last week. So we had a green week, but if you go to the raindrop chart, we actually had a red raindrop forming. So you can see here that even though we did close green, we did close red on the raindrop. So anytime you have a discrepancy like that, it's definitely time to kind of look a little deeper. So there were a few warning signs for sure. And one thing that I will point out on the seasonality is going into the next couple weeks for SPY, we do have a pretty dramatic downturn in the seasonality over the next couple weeks. So, is seasonality pointing to a bigger move down? We'll have to see. But if we do continue down, the level to watch below on the weekly side would be this huge volume shelf, which includes the point of control around, let's say, 417 to around 420. Now, moving on to the Qs, pretty much same thing here. We did break down through that. Ascending wedge. You can see here from this swing low point. If we did continue down, that anchored VWAP is below around 344 to 345. And it seems like not too long ago, we were just talking about the price getting to 344, 345. So remember, this has come a long way. It's healthy to have a pullback. So on the weekly side of things, we had a perfect rejection at the 1.618 extension. Once again, we did have that red raindrop last week versus the green close. So that was something to keep in mind. And then going into the next couple of weeks, we do have that smaller win rate over the last 5 years. So the next 2 weeks do have a 40% win rate compared to, the last couple weeks had a 100% win rate. And we did see that play out pretty nicely. So we'll just have to see what happens. All in all, rejection at the 1.618 extension on the weekly, and then that ascending wedge breakdown with possibly a test all the way down to the 340s, 344, 345 going into the week ahead. IWM is one that also broke down. This is more of kind of a ascending triangle here. You can see that we did break down on Friday. The area to watch, you'd have to really zoom out to the weekly chart. So if I turn off the volume by price and just look at this breakdown, you can see that I've anchored the VWAP from this breakout back in November of 2020. And you can see we did move right down to that anchored VWAP below. That is definitely going to be an area that we need to hold. And then seasonality, you're not seeing too much. I think it's about a 40% win rate going into next week as well. So pretty much weak seasonality into next week, breakdowns happening. We'll have to see what happens from here. Going into the VIX. So the VIX is definitely one that, as we always talk about, you can't really chart that much. It's a lot more than just price action here. You're looking at a lot of other variables playing in. However, pretty strong move on Friday, but it's this thing is still it's melting at this point. But keep in mind that we were hitting these higher highs on SPY while we're hitting these higher lows on the VIX. So that's something to, always look at too, the divergence between the VIX and the SPY. Now, going into the week ahead, we do have a 60% win rate for the VIX over the last 5 years. So there is a slight uptick in seasonality. So that could play out well with this stronger looking chart here. But remember, you can only really take a chart on VIX with a grain of salt. So take it for what it's worth. But things are pointing to possibly a little more downside into the week, next 2 weeks or so. Now, going into GLD, we were talking about this one last week. We did have this gap above. So you can see here that we did actually fill that gap above. So one thing to always remember using the gap snake, sometimes if you want to just highlight the bigger gaps, make your gap factor bigger. So apply, and you can see here that we did fill the gap above, but then we gapped up on Wednesday and then filled that gap on Friday. So this gap is finally fully filled. And you can see here on the weekly chart, we do have a little more time before we get closer to this apex of this symmetrical triangle, and we'll just have to see which way it goes. Now, going into the week ahead, another 40% win rate. So all in all, less than a 50% win rate for almost everything we've looked at other than the VIX. Going into SLV, you can see here that we did talk about this gap above. Now, this is one where we do have a gap below, so you're going to need to lower that gap snake ATR factor to, let's say, 0.2, and you'll see that you can see this gap highlighted. I've made an arrow across to show you that we did start to fill it, but we haven't fully filled it below. We'll have to see if that does go into full gap fill mode next week. Same thing on the weekly chart. We do have this symmetrical triangle forming, getting close to the support. So remember, all you need to do is right click, create an alert. And if you simply just want to know when the price breaks through this line below, just choose your breakthrough trigger here, make it as low as you can, 30 minutes, name it whatever you want, put your note, and then choose your expiration. So let's do 20 days here. So then the alert's created. You don't have to look at the chart anymore. You just know that once this breaks down, you're going to get a text message or an email noting that you are going to, or that noting that SLV is breaking down through that trend line. So all in all, metal's not looking incredibly strong going into the week ahead. GLD definitely had a stronger move than SLV. Now let's look at some crypto real quick. This is actually holding on surprisingly well. If I can spell, go to Bitcoin here. Now, one thing I will mention, we were talking about this kind of bearish pennant, this symmetrical triangle forming. We did break through to the downside this week. And so, this is looking more and more like we could continue down. We'll have to see. But on the weekly side of things, definitely not liking the break of this previous low last week. And you can see we've been talking about this anchored VWAP from the COVID lows for quite some time. And that remains right around 26.7 to 27,000. Now, what's interesting is going into next week, a 40% win rate. So I'm not sure why all of these have a 40% win rate over the last 5 years, but this is pretty consistent across the board. Now, ETH, Ethereum, is another one that we are literally right at make or break here. So the main thing that I would focus on is this diagonal trend line below. I've already put an alert there in case the price touches it or breaks down through it. And if we did continue to the upside, my target would be that anchored VWAP above, let's say right around 2,500 to 2,600. Now, on the weekly side of things, we are holding right at this longer term trend line. It's not support yet. It has been support in the past, but we can't say it's a support trend line yet because it has not bounced off. We have a little bit of a wick there, so there's a slight bounce, but all in all, we also have this anchored VWAP from this ascending triangle breakout back in November of 2020. So you can see there's really nice confluence here between that anchored VWAP and this trend line. So all in all, the markets are definitely looking a little risk off, especially with IWM, especially with Bitcoin and Ethereum both having pretty red weeks. So we'll just have to see how that plays out. Remember, price action over everything, and make sure to use some of these tools that we're looking at. Seasonality can really help you. Anchored VWAPs, alerts. Alerts allow you to just stick to a plan and stick to your process without, just jumping into something impulsively. Let your alerts go off and then look at the chart and see if you want to continue with that trade, or maybe you want to back off. So that's the nice thing about TrendSpider. The tools are there to help you become a less emotional trader and a less biased trader. So hopefully the broad market update was helpful. Let's move on to the next segment. Alrighty, let's look at this week's watch list with special guest Austin Silver, co-founder of ASFX. And Austin, we're going to be looking at some pairs, meaning Forex today, something we really don't look at too much on the show. So I'm excited to go over this, see how you look at the market on the Forex side of things. And I'll let you take it from here and tell us a little bit about what we're seeing on the chart, what indicators you're using, and we'll jump right into some of these different names.
Sure, definitely. I appreciate you guys having me. As always, it's good to see you guys. First, what we're going to talk about is my trade from today. I figured that's a great place for us to start. This is Euro USD. It's Euro dollar on the 15-minute time frame. And I know for everybody watching, my charts are a little bit different than what you're used to. So I'm going to explain that first. What you see on the chart is just simple exponential moving averages. That's my 200 here in white, my 50 here in blue, a 21 in red, and then an 8-period exponential moving average in yellow. So we kind of have like a shorter term picture to a higher time frame picture, just to give us an idea of trend. That's how I use the moving averages. Trend direction and significant levels is really what I'm looking at them for. Beyond that, you'll see the candles are black. So I've changed the color of my candles instead of green and red to just all black, basically because I have a lot of other colors on the chart. Green and red candles would make it very hard to handle all that color, number one. Number two, colored candles, I think very often can induce emotions where we then go after a trade to catch FOMO, to catch momentum. It induces FOMO to catch that momentum. So removing the color has really helped me, and the people that I have kind of shown it to, they never end up going back. It really works though with Forex, not so much with stocks. So if you're just a stock trader, I don't recommend jumping and changing your candles to black, because in Forex, we don't have gaps very often at all, which means that each candle paints exactly where the last one closed. So if you know how to read the difference between a bullish or a bearish candle, you can look back at the previous bar and you can tell, okay, that one was bullish, so this one should be bullish, or that one should be bearish, etc. So that's why I'm using black candles. It just kind of makes it cleaner. And if you understand that Forex doesn't gap, it makes sense why we can get away with it. So that's kind of the setup we're looking at on the top of the chart. And then at the bottom here is what we call a trader's dynamic index, a TDI. And basically that's just an RSI here in green with 2 moving averages applied to it. Those moving averages are applied to the close of the RSI value. And why all of these indicators are needed for the way that I trade is because I'm a short-term day trader. If I'm still in a trade like I am this afternoon, I can turn into a swing trader, but I don't come to the chart every day looking for swing trades. I'm looking to get in, make my money that day, maybe lock my stop loss like today and let it ride overnight, and I'll continue to let that position go. But I'm looking for those short-term moves. So what the TDI can do is, because the RSI is getting its information from volume and the EMAs are getting their information from price, when you have 2 different indicators gathering information from 2 different sources, if they both agree on a direction of trend and for timing of your entry, you can have a lot of confluence in that trade idea. I think that should make sense to everybody. I'm not like speaking rocket science, I hope. So that's why I'm using 2 different indicators. They're gathering info from 2 different sources. So that gives us our whole picture for the day. And the most important thing that I look for every day that kind of feeds the bias for the day is this yellow line on that TDI, on the Trader's Dynamic Index. It's a slower moving average that really dictates sentiment. The way that I was taught to use it is it's our market sentiment line. Are buyers in control or are sellers in control? We don't need to go down the rabbit hole of where are the buyers, where are the sellers, who is it? That to me, I don't work at a bank. I don't work at a brokerage. I don't know, but I've back tested what we do so much that I know it works. So I don't need to go too deep. I just know that sentiment line really does dictate trend and helps us find high probability setups. So that's the first thing that I'm always looking at. And then another thing that I really do pay a lot of attention to is the Asian range. So Forex is broken up into 3 trading sessions. You have your first 8 hours, which is the Australian and Asian market open. That transitions into the London market open and then the New York market open. Think of it, 24 hours, 24 divided by 3, it's 8. Simple. So what I like to see is price action move outside of the Asian range when I come to the trading desk, right as we move from the London session into the New York session. So I'm trading Forex typically from like 6 a.m. New York time until about 10 a.m. That's I think the best window to find the trades that I like, because you have that overlap of the London and the New York sessions, the most volume, the most volatility. And that's where you're going to see, I think, the biggest moves. That's what the back testing really does tell us. So that's kind of what you're seeing here on the chart. Now, to explain today's trade, I have a couple of things already drawn on here. The position that I took this morning happened just after 6 a.m. on the close of that 615 bar, as you can see right here. So that bar breaks through the 50 EMA after price structure moved off this bearish divergence low that we created yesterday. So divergence is a big thing for me. And if you're not using divergence, try it out in your trading, whether you use an RSI or a MACD. I know TrendSpider posts about divergence a lot. It really seems to help people not only identify key levels to trade off of, but also to avoid choppy potential setups. Because what we define divergence as in ASFX is change. Divergence doesn't mean, oh, it's going to reverse today, go the opposite way right away. It means something is changing. The relative strength in my situation, because I'm using an RSI on the bottom, that's giving us the true direction of the market, where price action is actually not faking out, but it's moving where there's less strength. So here, where your RSI is rising and price action is falling, and I draw my lines using the bodies of the candles, not the wicks, where we have that bullish divergence, you call it bullish because of the direction of the RSI, that sets up extremely significant levels for me. And I'm going to show you guys on a couple other charts here. But as you can see from yesterday, which was Tuesday night, this vertical line is our period separator. So this is like Tuesday, New York session. This big bar down here that you see on the left side, that was when the CPI news came out yesterday, shoving Euro USD lower. So that's like during the New York session, 8:30 in the morning. So overnight, that bullish divergence was there to set up our low at about 1.170-ish, 1.1770. Now that low is then confirmed in the Asian session here, and it bounced. So that kind of confirmed to me that we had some significant support there. Now we'll move forward into the rest of the session. I have the Asia high marked off here. So that's the high that price action creates in the first 8 hours. That level is what we used as support. It was resistance overnight, then just used as support for us to move through the 50 EMA up towards the 200 EMA here. Now, I call this a D2 setup. I have 3 systems that I look to trade every day, an A1, a D1, or a D2. I'm very specific with a checklist of rules that I use for each one, and that's what we've back tested. So that's where I feel the most confident to put my money. So this D2 signal is set up using this bullish divergence to find the low. We look for structure and breaks of the 50 EMA after that structure is set in. And then the most recent higher low is where we place the stop. If the risk reward is good enough, at least 2-to-1, then we look to take that trade. And as you can see here today, when this setup presented to the 200 EMA, it was about 2.1 R. So it fit the bill for a good risk reward setup. I knew where my stop should go, and I knew that it should hold the 8 EMA and continue to the 200 today. At best, that's what I was thinking. Look, that'll be a great trade. And if it does go higher, as it has, I know I can lock my stop. And then the way that I manage the trades is I'm closing them at R multiples. So for this trade, I took some off at 1R. I took more off at 2R right here around the 200 because I know it could stop here at the 200 EMA and come down, but it didn't. I just moved the stop up and let it do its thing. I'm a big believer in the whole react, don't forecast. Why would I get out of the full trade at the 200 EMA if it hasn't given me a full exit signal yet? That's ridiculous. React, don't forecast. So I move my stop up, mitigate my risk, but I let the market do what it wants to do. I don't know. Like I said, I'm not a broker. I'm not at a bank. I'm the little fish in the big ocean, you know? So I just let the market carry me in these trending moves, and I'll still hold this position into tomorrow. So that's this D2 setup here. Very basic. I know I kind of threw a lot of new information to everybody, but hopefully you guys followed me here with the divergence, setting up the structure, then using the Asia high as the support level after it was broken. That resistance overnight with the break of the 50 EMA, breaks of the 50 EMA, we call them change of bias. So you have really strong change of bias as it held above the 50 EMA overnight. Then it comes off that strong support level. It just made sense to me today. So this was a really good trade. Now, I want to transition to Bitcoin quickly, just so you guys can see what this looks like applied on a higher time frame. So we're going to go over to Bitcoin. We'll go to the daily chart. And you're going to see basically an inversion of that setup here on Bitcoin. So inverted meaning this is now on the top with bearish divergence signaling to us that we might get a reversal. So here, if I can go back far enough, you'll see the RSI high is set. This is like beginning of January-ish, right after my birthday. But price continued to go higher, as everybody knows, from January into February into March, even into April. Price, that's when it hit its 62, 61,000 high. So as that price moves higher, notice how it holds above the 50 EMA. You don't have that change of bias yet that we look for the reversal to then come in towards the 200 EMA. As it holds above the 50, we're not doing anything. We're staying long biased. But once it breaks the 50 EMA for the first time, we start to get interested. I tell everybody, don't go shorting something just because it's got bearish divergence and it breaks the 50 once. Remember, we wait for structure. So now as it breaks back above the 50, but sets in a lower high off the divergence structure that we have set, this second break of the 50 EMA, I would call it, I know there's a couple of other breaks in here, but this strong break after the lower high is set in is really where we would look to then see it move towards the 200 EMA. And if it breaks through the 200 EMA with a body, the back testing tells me that it then should actually fall lower towards the 800 EMA, which is down here. So this day happened to be the day that Tesla stopped accepting Bitcoin. And if you go back, they had a big day back here where they pushed through 40,000. That was the day they started accepting Bitcoin. So the divergence was started almost by Tesla, and then it was finished by Tesla when they decided to say, we're not taking Bitcoin anymore. So it kind of lined it up fundamentals with technicals here. But now I'm hoping you guys can see how that D2 strategy is applied on the top and on the bottom. It's just a technical pattern. And that's why, look, as much as I think Bitcoin could be the future, you got to read a chart. And when this turned bearish, I've been tweeting about this every day since May 12th, saying, hey, it's holding the 8 EMA. 8 EMA is staying under the 21 EMA. Now we're using the 200 EMA since it was broken. Now, look, we're using it as resistance really strong over the last few weeks. So I think for people to be like, oh, buy the dip, buy the dip. I hate that because it's like, why? If it's telling you it's moving lower, stay out. Wait for it to turn. Let's see some structure and see it move higher. And that's when you can go in to buy a dip. If you're really trying to do that on a bigger time scale, you won't misprice by that much. And I've never seen someone misprice just by waiting. You know what I mean? You're still going to be able to make your money. So that's like the D2 idea. And I know that that's something that's a little bit more advanced for people that have never seen Forex or never heard me before, but that's one of the systems that we trade. Now I can kind of transition to GBP NZD back to the shorter time frame, to the 15-minute. This was a trade that I took on Monday. Now this is a trade in trend. This is a trade that I'm much more comfortable with compared to the D2 trade. This is just basic structure holding above that 50 EMA. But this one I thought was important to share because here, this is the thing, like I said at the beginning, that I look for at the off the jump every morning as I go through my whole watch list, which is about 17 currency pairs, mainly euro pairs and GBP pairs, just because they're traded the most. This yellow market sentiment line is what I'm looking for first. Where is that? Because what we found through back testing is that if you look from the start of the day to the point that you're coming to trade, which is about 5 o'clock in the morning, this is 5:30 in the morning right here. If market sentiment holds above a 50 value and your RSI doesn't go overbought above a 70, you have a really strong buying trend. Versus if it was in the selling zone, we call it under the 50 value, you'd have a strong short trend. The key thing about this that we've really worked on over the last 2 years that's made it powerful is when that market sentiment line stays in one zone, either above the 50 or below the 50 for that whole day, as this one is doing, that's a much stronger trend than if you, let's say, look back at the previous day. You see how here the market sentiment line goes from above a 50 value to below a 50 value. The second that that happens, we call it a swapping market sentiment line. And logically, again, if that market sentiment line tells us who's in control, buyers or sellers, what would swapping mean? It would mean indecision. So probabilities on an indecisive market sentiment line are naturally going to be lower versus probabilities in a perfect market sentiment line. So that's why I really liked this setup on Monday. Now, on top of that, if you go back to the previous week, this is Friday, Friday's high was respected, as you can see, through the day Friday. But by the time I was up 4:30, 5 o'clock on Monday, it was actually now resistance turned support. It was broken here in the Asian session, used as support overnight to build slight bearish divergence that I have marked off here on the top. So that's definitely something to keep in mind. But remember, if we're above the 50, I'm not letting this bearish divergence tell me we're coming down. We're still above the 50. I'm still going to lean into trend, especially when market sentiment tells me that that's what we should do today. So we ended up finding what we call a D1 entry, similar to the D2, because it's a divergence signal here in trend. And this happened off that significant support level. And what we do for that entry is we go to the 1 minute and find bullish divergence and breaks at that 50 EMA. And it really comes down to that market sentiment line too. We found that on the 1 minute, if you're using market sentiment, when it's in the buy zone, if that's when you look to take your position, then you're going to, if it holds that buy zone, you're going to be able to make money. For example, back to Euro USD, if you look, let me drag this over here. If you look at today's trade, see if I can take this down to the 1 minute. I took the position at around 6:15. So if we go like this, and we go back to 6:15 this morning. So right here, 550, right? Look at the market sentiment line here from 540, 545. Look at how it holds above a 50 value, but does not go overbought. See how it's staying in the buy zone, we call it, staying in the buy zone. Look at how many hours it's spent in the buy zone from 540, 640, 740. It's still above a 50. The RSI, excuse me, on the 1 minute, that's going to go overbought all the time. Don't get distracted by that. Look at the market sentiment line. It's a slower line. It's weighted heavier. So it's very important. And look, still holding the buy zone, all the way until 9:35. That's when what's that, 5 hours, 4 hours later, where it finally tells you, okay, maybe we're slowing down now. So just using that line, not even using price action on the 1 minute, just using the market sentiment line is a game changer for me and for everybody that I'm teaching it to. I think it's really making a big difference on everybody's trading. So that's kind of the idea. It's using the technical analysis from the 15-minute to get down, even if you want to the 1 minute to know how to manage that trade a little bit better. So we got time, I think, for one more, right, Jake?
Yep, quick one more, and we'll be right at time.
Perfect. So I want to share a really fun, easy to remember rule that I've been using over the last longer than 2 years, probably 3 or 4 years. It's called the 2-candle rule. And it's basically a simple trick for drawing support and resistance. So what we do is we'll look at just highs or lows, wherever we see a high of day or a low of day, and we'll look at the pins on those bodies. So if you look back here, this is on Monday. Monday's high, this pin right here. What we would do to confirm that as the zone that we would draw the rectangle in is we would look at the 2 candles to the left and the 2 candles to the right. And if they are not higher than that pin is very significant to us at that point. The only way it could be more significant is if it had bullish or bearish divergence as well at that significant zone. But anytime I'm looking to draw zones, because everybody likes to say this is a support level and that's a support level, I just defer to the 2-candle rule. And I really do believe there's never one exact price. I don't believe it works in stocks, futures, Forex. There's never one price that is the level. It's a zone. There's always going to be orders. Like you show that volume by price thing, Jake. It's always by shelves of orders. It's never exact. So to me, this pin where there's not 2 candles higher or 2 candles lower, that would be our significant level. And then what I did here, because like I said, this was Monday, go back, look at Friday. It couldn't get off through that zone. Look at Thursday, same. Not that I'm drawing that zone based on Thursday's price action up here. That zone's still based on Friday or on Monday. So you can even go back and see, all right, it's had an issue with that price here. It's had an issue with the price here on Friday. Now on Monday, it's showing me more issues with this price. It's like 173.30 right here, say 1.7330. Then again, yesterday, look, rejected off of that price. Yesterday, we had some guys short here using a D1 idea, using divergence on the 1 minute off this zone, taking it back the other way, just by identifying that using the 2-candle rule from Monday. So I think for support and resistance zones, the 2-candle rules really helped me. And then again, today, look at it's showing you a very significant area. Today, when it comes to the zone, naturally, you don't want to forecast and think it's going to blow through the zone. React. As it starts to reject that zone, naturally, it makes sense that that falls away. And here, this huge bar is based on some CAD news today, but I thought it still was valuable to talk about because look at where prices come back to, right to that significant zone where it's chopping around in here. So the 2-candle rule is super valuable, kind of similar to how you use the volume shelf, Jake. Mm-hmm. But yeah, that's everything that I've got for us today. I was going to go into some inflation stuff, but if you want more about that, come find me on YouTube and we can go into that. I think we're just at time. So this is good.
Perfect. Hey, thank you so much. I think honestly, this may be our first, look at the Forex market. So we'll definitely have to have you back on again soon. And glad you're liking TrendSpider. I'm glad we were able to get that TDI indicator on there.
You guys are awesome.
You. And,
you guys are awesome.
And as always, really appreciate you coming on to discuss and looking forward to hopefully seeing you later this year in Denver. And any last words before we head out?
Nope. I appreciate you guys having me on. I love the product. I appreciate you guys. I tell everybody, you guys listen to customer feedback better than anybody else. So if anybody's watching this and not using TrendSpider, you're just missing out. Try it out. If you need something, Jake and the guys will help you. It's a great product. You guys will love it. So check it out. And then if you want to come find me on YouTube, Austin Silver FX, ASFX, I'm everywhere.
You the man. All righty, guys. Well, that is it for the watch list. Let's move on to the next segment. Alrighty, let's look at some chart requests going into next week. Starting with Apple. Apple's one that just has been so overextended. And one thing that really shows that is looking at the multi-time frame analysis feature on TrendSpider using the weekly Bollinger Bands with the daily candle overlaid on, the daily candle with the weekly Bollinger Bands overlaid on top. And you can see here that the last few times that we've been this overextended above the weekly Bollinger Band, we have had some pretty strong moves to the downside, not always down to this SMA 20 below, but you can see back in December, we did pull back from around 138 and bottomed out around 126. Back in January, we topped out around 145, pulled all the way back to around 116 in the beginning of March. And so we'll have to see how far this one goes. However, it is showing very overextended. And on top of that, using the technicals with the seasonality, you can see going into next week, we only have a 20% win rate. So definitely two things to keep in mind on the bear thesis side. Remember, we always want to have two theses. The bull thesis is the fact that we did break through this all-time high, and you can see this weekly raindrop candle does have quite a bit of volume at the top of the range, suggesting that there was someone, really absorbing that supply that was being dumped on the market near the high of the week. So we'll just have to see how this one plays out. But all in all, very overextended on the daily and going into a very weak week of the year from a seasonal standpoint. Going into Amazon, we have a very similar setup here. And this one's actually made a move stronger than Apple. So what I'm going to do is I'm going to add the anchored volume by price, and you'll see a couple things here. One, if we anchor the volume by price from this reversal point, we have this volume gap below that the price is just pretty much melting through. Now, on top of the volume gap, we also have a price gap below that would fill right around 3,500. So definitely keep that in mind on the downside. And then on the weekly side of things, you can see that we did close kind of right at this longer, I don't want to say longer term, medium term resistance area. This would have been that third touch to make this a strong trend line. You can see there's not a lot of volume at the top of the range for this weekly candle, unlike what we saw on Apple. And here's an example where you can have a break of the previous high with volume at the top of the range and not continue up the next week. So just keep that in mind when we did talk about Apple having that volume at the top of the weekly range. That doesn't always mean that we're going to, continue up, especially with how that daily looked. So all in all, Amazon definitely showing some weakness going into the week ahead. And it would be healthy. I mean, we went from 3,100 almost to 3,800 within, less than a month and a half. So this is a healthy pullback, and we'll just have to see how far it does pull back. Now, going into the week ahead, the seasonality is actually 60%. So not as weak of seasonality as you saw on Apple with only a 20% win rate over the last 5 years. Going into the next one, PLTR, this one is very commonly requested a lot. So that's why we keep showing it. I think a lot of people are still in this one, just kind of still focused on that fundamental longer term picture. So one thing I'll point out here is using the multi-time frame analysis once again. If this did continue down, definitely watch for this lower weekly Bollinger Band right around 1950 to 1960. You can see this was an area where we bounced off back in May and then had a pretty strong move right to that upper weekly Bollinger Band over the next month and a half or so. On the weekly side of things, you'll see here that we did almost move down perfectly to that trend line below that we were looking at last week. And we'll just have to see if we do hold this area or we do break down. Now, on the seasonality side of things, this is still a very young stock, so we don't have that seasonality that we did for Amazon and Apple. Now, going into SoFi, I don't know what's up with this one. Everybody wanted to see this one as well, which is fine. We can definitely look at it and kind of see what's going on. One thing that I would mention here, just using a basic trend line, is the fact that we did break down through this ascending trend line is what I'm trying to say. And that was after really retesting that previous support, acting as resistance on Friday, and a really strong move down on Friday. Now, on the weekly side of things, this will be the fourth red week in a row. If we were just using basic kind of horizontal levels here, you'll see that this area below highlighted in orange is just this previous low back from March of 2021. And then around this previous low here, we could even move this down a little more, let's say to around $14, $14.15. So all in all, this is not really showing any signs of a reversal yet. And this is where you really just have to use your alerts. If you want to look at this previous low as an alert area, just create a horizontal line here, create the alert at this line, choose if you want to actually break through or just touch this area, set up your alert, and you're good to go into next week. Same thing with this one. This is a pretty young stock, so there's not a lot of seasonality on this one yet. And that's why you can see that a lot of these weeks of the year are not highlighted, because we haven't had any weeks of the year, because this is still such a new stock. It came out in December. So that's why this huge area, there are no bars, because we just don't have any data there. Going into The last one, Tesla, another one that a lot of people wanted to see. Tesla's been a great case study on using the anchored volume by price and the anchored VWAP over the last couple weeks. And so if we anchor the volume by price from the swing high, you'll see here that was kind of deja vu this week. We had the breakdown last week through the volume gap, bounced right at the anchored VWAP and this next couple volume nodes below, moved right back up through the volume gap, right up to this break-even supply. The market couldn't digest the supply. We have a pullback. We'll have to see if we do fill this gap below once again. And that's not a price gap. It's just a volume gap that's highlighted in orange here. But if we did continue down, that anchored VWAP is below around 630. And then, if we did undercut it a little bit, that would be around 620. So 620 to 630 would be maybe a short-term area to watch. That doesn't necessarily mean that it's going to stop there, but that would be the next level of interest below. Now, let's turn on just the regular hollow candle for Tesla, and you'll see here that we once again could not get through this all-time high anchored VWAP from January of 2021. So this is a big area to break. Once again, we failed to break through it. So possibly even retesting this lower trend line below. So if we did break down through this anchor VWAP from the swing low back in May, as well as this volume node below around 620, then your next level below to watch would definitely be around, let's say, 610 to 612, which is simply just this weekly trend line below. So all in all, another drop off here for seasonality on Tesla, a 40% win rate. Definitely on the seasonality side, 40% has been kind of the common theme across the board here for almost everything. So all in all, definitely not the strongest historical seasonality going into the week ahead. So hopefully this was helpful. Remember, we always do these chart requests on Twitter on Friday. So if you do want to see a chart, make sure to post a comment on that post. And we really just like to aggregate and look at how many charts have been mentioned. The more times they've been mentioned, the higher chance they'll be on the chart request segment. Remember, we do have a mobile app now. So for those that are a part of TrendSpider and you are a customer, you can download that mobile app via iOS or Android. And remember, this is a companion app. So you still need to add your indicators on the mobile desktop workspace. So when you log in, you'll see the mobile workspace at the very bottom. Just click that. You can make it pretty much personalized to exactly what you want to see on the mobile side of things. So then when you pull up your mobile app, you'll be able to see all those indicators that you added on the desktop version. So make sure you check that out. Definitely something good for when you're on the go and just maybe you're in bed, you don't want to go to your computer and look at charts. You can just scroll through your phone and look at charts that way. So everybody have a great rest of the weekend. Everybody have a good trading week next week, and we'll see you next weekend.